Hey, good evening, everyone. This is Kevin with Real Traders Webinar. And as always, we would just like to start off and thank everyone for joining us here tonight. Taking time out of your busy schedules. And tonight, we have a really special webinar put together for you guys. We have with us the Mr. Top Step team. And we're going to have a couple different speakers that are going to be each teaching their different strategies and styles on trading, and we're going to be starting off with Danny Riley. Now, Danny Riley is the president of Mr. Top Step. He's been a floor trader for 35 years, and he's going to give you more information about how this is going to go and what they're going to be talking about tonight. Danny, are you there?
Yes, I am, Kevin. Thank you very, very much.
Thank you. It's all yours.
Okay, so I'm going to take over the screens from here.
Yep, they can already see your screen, Danny.
Okay. Well, good evening, everybody, and thank you for attending. What I'd like to do real quick is just tell you a little bit about who I am and how Mr. Top Step came about. But before I do that, I'd like to thank Mark from Real Traders Webinar. I think that they're really a class act. Kevin himself has really worked hard, and I know that Mark told me not to do this, but I think that good work needs to be credited to those that do that kind of work. And surely Mark and Kevin have really worked hard to bring really good stuff to the table, and tonight I'm going to do my best to keep up with the tradition. Anyways, my name is Danny Riley. I grew up in Chicago. I started on the Board of Trade floor when I was 18 years old. I went from the grain room making $60 a week over to the bond room where I worked with some of the largest bond traders in the world. I was around when Tom Baldwin started with $10,000 in the bond pit and made over $175 million. After being in the bonds, I ended up over at the CME Group and in the S&P 500, where I grew one of the largest desk operations on the trading floor ever in the S&P, according to CME volume statistics. I guess my claim to fame would be that I've worked with a lot of great traders. I've worked with Paul Tudor Jones. I still today work with Marty the Pitbull Schwartz, the guy from the Market Wizards book, and several of those traders. But I still also am on the trading floor of the CME every day working at my desk, as I know that a lot of people would ask what's going on down there, but as we all know that 99% of all the futures are traded electronically, and about 80% of the CME options are done open outcry. So we're still carrying on the tradition with our hand signals, putting orders into the pit and quoting up markets the traditional way, I would say. But back in 1987, I was there in the crash. I've been part of every major stock market event since 1985. I've got some big things that I've done throughout my life. I ended up doing business for Sheikh Mohammed out of Dubai. I've traveled in and out of Dubai. I've been pretty much all over the world. I've worked with a lot of the big banks. Before the credit crisis, I was doing all the Bank of America business. We had over 600 banks, hedge funds, and prop firms on our instant message on our desk prior to the credit crisis. And obviously that list has shrunk quite a bit over the years. But what we decided to do several years ago is we decided to take the very same flow, and I know you would say, well, everything's electronic in the futures. Well, the S&P pit still has about 50 or 60 locals in it that go in there every day, and they go in there not just because they like to trade in the pit, but the trading floor as itself is a mecca of information, boards and quotes. So I decided a long time ago to take some of the things that we did on the trading floor that we offered the big hedge funds and the big professional traders and roll it into an instant message group called the IM Pro. And we built up something called Mr. Top Step. Now, Mr. Top Step is not a broker. We don't advise people where to put open up accounts. We don't solicit their money to trade. We're one of those old school fashioned groups that believes that if you can avoid paying $10,000 for a class, or we just believe that there's a lot of really good people out there that you can learn from, that you don't have to spend tens of thousands of dollars to find out that particular style didn't work for you. But anyways, as things have progressed, I did all the UBS program trading business, and that's part of my background. I believe that I'm an authority in program and algorithmic trading. And if you ask me why I say that, I tell you exactly why. I'm one of the few people in the world that probably got hit. I lost $8 million during the flash crash from an errant order in my desk that a hedge fund that tried to roll out of a big S&P option spread. He took off one leg of the spread, and then after the futures rallied, he lost about 45 or $50 million and left an $8 million loss for me at the clearing firm that I work for. So from that background, I've learned a lot about program and algorithmic trading, and I was actually interviewed by the CFTC after the flash crash, and what we did was we tried to put as many, we had this chat room on the trading floor that we were offering out, and then back about 4 years ago we decided to take it public. And it's still, we've still got a lot of people on an instant message. It's an institutional chat for the big firms, and then we've got the Mr. Top Step forum, the I Am Pro, where we've got several traders in there, and I'll explain how this all works. But years ago, it used to be me, plugging away, talking about program trading, talking about stops, news, anything that was going on. Now, we had several direct lines. We had, well, not several. We had about 20 different direct lines from, all the big banks, all the big hedge funds, and these big orders would come in, buy and sell 1,000 S&Ps and market-moving stuff. At one point, I had 11 clerks at one desk in the S&P. Today, we have 5 or 6 guys. No, we have a total of 6 guys at our desk in the S&Ps. But it's all options. But from that, during that time, there was a trader on our chat, on the institutional chat. His name is Cyrus, and Cyrus ran the prop trading desk at Goldman for the equities. And this is back about 4 or 5 years ago, and he came in on the chat one day, and he said, look at Danny, he goes, we really love this stuff. He goes, you've really, really created a collective. Now, tonight, what you're going to get an opportunity to look at is you're going to get an opportunity to talk to some of the collective. Kathy from Structural Trading, Frank the Pivot Boss, Jack Bros from the Bonds. He's not here today. I'm sorry we couldn't bring him in. We wanted to make sure we could get as much as we could in the hour for you to explain who we are and what we do and why we think our product is so top notch. But anyways, one of the tools that we created is called the MIM. That's the Mr. Top Step Imbalance Meter. Now, for those of you that don't know much about imbalances, the New York Stock Exchange every day at 2:45 Central Time or 3:45 Eastern Time produces what they call an imbalance. It is the net of all buying and selling on the New York Stock Exchange as you go into the close. It can come in dollar amounts. It can come it can come in millions, and it can come in per share. But what we've got is we've got a live data feed from the New York Stock Exchange that shows you how these imbalances develop as they go into the latter part of the day. Now, this is not the only tool that we use during the day. They've got me down on the trading floor. They've got me talking about programs and trading and stops and algorithmic activity, and then we refer to Kathy, Frank, and Jack in the bonds, and Kathy for her structural trading, for her stuff that she does, and what Frank does, is for his pivots. But anyways, it all folds into one thing, and what we've created is a group of traders that all work collectively together for the greater good of the room. And I know that may sound funny, but at the end of the day, I don't want to insult any other educators out there or say that I don't believe that their product's right, but I think it's really, really hard in this day and age with so much algorithmic trading going on and all the twists and turns that we see in the S&P, that one guy thinks he can do it all. Now, I'm not saying that there's not people out there. Again, I work with Marty Schwartz. He's one of the world's best-known traders, and I work with him every day. Today, Marty had 45,000 crude options expire. Okay, so we're heavily involved in trading. My trading desk did about 10,000 S&P options today, and we bought about 10,000 minis for a hedge fund. And yesterday we bought 10,000 minis for a hedge fund. So those types of orders create buy and sell programs. They create what we call trading flow. And then what I do is, I'm going to be honest with you guys, I'm not a chartist. But what I do is I rely on Kathy and I rely on Frank for their levels, and they rely on me for a feel from the trading floor. Now you may say, well, what's he talking about? Well, I would say that I think when Frank or Kathy talked a little bit about it, we've got our own little things that we use on the trading floor when, you know, overbought, oversold during the morning. We try to come up with levels, and when we have matching levels, we generally are pretty correct on our levels. But anyways, back to the MIM. The MIM, every day, this is an example of the meter. Every day at 2 o'clock Central Time, we turn on the MIM. Now, this is a product that we offer the people in our room that join our room. On the outside, it costs $99 a month, and I think that Mark and Kevin will be talking about that a little bit later. But at 2 o'clock every day, the MIM turns on. Now, today when the MIM turned on, it was 89% to the buy side and showing 800 million to buy. And I think the S&P was trading about 1723 and a half, 1724 and a half. And as the meter, there's every 15 minutes there's an updated you get an updated reading, and every 15 minutes that MIM increased. So what it was showing is, it was showing on the New York Stock Exchange that more buy orders were going in, more MOC buy orders were starting to pile up, and not long after, the S&P took out its contract high at 1726.75 and traded up to 1728 even. Now, this is just one of many tools that Mr. Topstep uses during the day. Again, I think that it's important. What I like about Kathy's style is she's out there, she's putting out her trades. Today I saw several winning trades. Today I saw Pivot Boss come in with several winning trades, and crude oil also. Personally, last week the room put out a recommendation to get long calls, and we did really, really well on that. I think sometimes, trading the futures is a great way to day trade, but they're kind of hard to hold. Whereas if you put on an option trade, or buy cheap calls, or your risk on calls, and you've got a feeling that the markets are going to pop, you've got a lot. It's just an easier way to hold along a position. But this is another example of how the MIM increased later in the day, and the S&P sold off. As you can see, the readings continue. This is an example of how the S&P popped up, and then after 2 o'clock, you had a 77.8% sell side imbalance, and then at another 15 minutes later, you had 80%. Another 15 minutes later, you had 78%, and you can see exactly how the S&P sold off. Now, I want to explain something. I don't think that, again, I'm one of those guys that doesn't believe that there's one foolproof way to go about this. I think that, like Marty Schwartz has taught me, if you want to make the money, you got to do the work. Now, the MIM is just one tool of many, and it also has its days when it doesn't work. But what I want to do now is I want to turn it over. This is another example of a chart that we made where the MIM basically showed sell imbalances right at 2 o'clock, and you can see where the arrow is at 2 o'clock right at the top of the chart. And right after that, we had a little pop-up. The next reading, it shows 57% sell and then just the S&P just continued to go down. This is the type of stuff that we turn on every day. We offer in the room for our traders, and it's a really, really exciting tool. And if you've never learned about imbalances and MOCs, I think that Mr. Topstep would be a great place to learn. Anyways, what I want to do now is I'm going to be turning it over to a couple of the collective. And is it Kathy that's stepping in first, or is it Pivot Boss that's coming in? And what I want to do is I want to thank everybody for allowing me to come in today. I got up at 4 o'clock in the morning. I updated all my stuff that I do in order to keep up with the markets, pre-market. I went romping down to the trading floor. I worked all day at the trading floor, and now I'm across the street from the Board of Trade in the Mr. Topstep offices. I love what I do. I try to put my heart and soul into it. I try to work hard every day, and I think that those are the parts of being successful. But anyways, we're going to turn it over to the other panelists, and I want to thank everybody very much.
Frank, you there?
All right,
Okay,
everyone.
it's all set.
Just gonna go ahead and share my screen here, and so hopefully you guys can see my screen right now. Um, Basically, uh, social trading, the power of social trading. I am a true believer in this, and you just heard from Danny Riley himself, and I'm a true believer in what Danny's has led through Mr. Top Step. Again, my name is Frank Ochoa. I'm author of the book Secrets of a Pivot Boss, founder of Pivot Boss, and I'm also a contributing partner of Mr. Top Step. And basically, I have been truly for Mr. Top Step Trading Room and the collective. And I just wanted to provide an approach that I like to use, and also just give you a feel for how the collective goes about its daily routine every single day. And basically, when Danny talks about the collective, it's basically every professional trader that's in our trading room, and that includes traders that pay each month to be in our room. The traders that provide flow, provide information, analysis, and trades in an effort to help each other make money throughout the day. Everyone has a different style, everyone has a different approach, and everyone has a different way of trading, and that's what makes the collective unique and powerful. And Danny also talked about uh, the amazing traders that we have at our disposal, and that's something that I think is amazing, and that's why I'm really truly fortunate to be a part of this, because with Danny's experience and his feel from being on the floor for so long, for his program trading experience, in my own personal trading, I've learned an immense amount about program trading just by listening to Danny and the way he conducts, the way he goes about talking about the program trading throughout the day and what he's seeing in the flows. It's truly impressive. There's other contributors like Kathy Garber, who you'll um, hear from here soon, who has a deep understanding in harmonics and volume profiling. Jack Bros brings a great experience from the floor and just does a fantastic job with bonds and other instruments as well. And my approach is very simple. I have a three-part approach, and it's all about identifying key levels, number one. And what I like to do is identify key levels from program or algo levels that I see, any kind of price-based levels that are offering support or resistance, and then I do volume-based levels as well using volume profiling. And after I get a key level that I really like, it's then time to identify key targets, and those accurate targets, I use average daily range to forecast these targets, and I'll show you this here in a couple of examples here, and if we have a little bit of time I can also jump in the charts, but basically the way I forecast these targets is very simple. I approach trading in as simple a way as I can, and if it makes sense to me in a few words, then that's usually what I like to use. And with targets, I use average daily range to help forecast some very accurate targets for daily, weekly, or monthly targets. And once I have targets above and below current price, then it's just about utilizing pro-style techniques, keeping in mind on risk management and trade management, and using other techniques to scale in, scale out of trades, and just have as precision entries as you can in the market. And that's what I love about the collective in the Mr. Top Step Trading Room. Basically, it's all about professionals engaging the market in a professional manner. And you heard Danny himself. He got up at 4 a.m. this morning and got to work. And I think with every professional trader in our room, we all do the same. There's days where I'm up very, very early, 4 o'clock as well. Other times where it's 5 something and it's late for me to be getting up. So it's hit the ground running early first thing in the morning and start pounding out levels and getting it out to our audience so that you can benefit from these levels as well. So when you talk about the social trading edge, this is what makes the Mr. Top Step Rooms truly unique. This was a live trade from yesterday's session in the room. And what we like to do is every morning we do a pre-market report at 8 a.m. Central Time, 30 minutes before the RTH market open. And I'll come on and provide some levels and some guidance, or even any trades that I'm in. Kathy will do the same, and then Jack Rose will clean it up at the end. And basically what you're getting is 20 minutes of real-time analysis from traders all over that are sharing their levels. And the true collective And the social trading edge really comes from the matches you get from these levels. I have a way that I go about analyzing the charts, and I identify key levels, and then so does Kathy, and so does Jack, and so does all the different traders in the room. And what's unique is we're all coming up with levels that we see, and we're all doing it with different tools or different experience, but we're all matching at levels. And when we all have when we all bring a certain level to the chart that we've arrived at using different styles of analysis, that's where the true power is behind this social trading. And a great example was yesterday. Right at 8 o'clock, I get on the mic and I start providing levels. And the first thing I said is, I just triggered long crude oil off 195. So I bought down here at 195. And just before that, another contributor to the room, Sam, says he's long crude oil as well. And this orange level down here has been a key level in the charts around that zone for a couple of days, and we've been watching bounces off this zone the entire time. So when I told the audience, hey, I'm in at 195, and my two targets are 101.78 and 102.25. That's what I said right there at 8 o'clock. And over the course of the rest of the day, we hit 107.78, I take half off, and then we hit 102.25, and I take the rest off. And, it was right there for everybody. We all kind of ganged up and said that's the level. And, I showed the trade there, but a lot of folks participated in that rally, and after you get such a unidirectional move, every pullback becomes a buy. So many traders in that room picked off great trades in this one chart yesterday, and that's just one example. So what I wanted to show you today is how did I arrive at these targets? And this is the average daily range method, my ADR method for calculating targets. Again, it's very, very simple. The idea here is you use the average daily range. You can also substitute average true range, but average daily range. And I like to use a 10-day average. So you look at the daily ranges, the high and the low for the day, using extended trading hours data as well, and you look back over the last 10 sessions, what's the average daily range? Well, in crude oil, the average daily range was $1.91. $1.91, so 1.91 points is the average 10-day range. And what I like to do is I like to forecast percentages of that 1.91 value, higher and lower from the day's high and low. So we got the overnight low, which was 100.82. We eventually got down to 175, but my targets were calculated on the overnight low. Overnight low was 100.82. And if you add the average daily range of 1.91, that gives you a 100% daily target of 102.73. And you can see that price hit that level. What that means is that crude oil traded a range that was its average for the day. If crude oil is moving on average 1.91 points per day, if you can identify the potential high or low for the session when it's happening, you can then get in at that favorable level and just hold it until price reaches those targets, right? And scale out along the way. And this target is what I call a normal target. That's just a normal 100% target, but it's my secondary target. My primary target is always the 75% projection. So basically what you're taking here for the 75% projection, you take the low plus the average daily range times 75%. So basically 75% of 191, you're projecting that higher from 182. That gives you 102.25 as the primary target. This target has a success rate of 80+% on being hit any given day. And that's why I scaled out at that level. Of course, there was more to be had there, but we were coming into resistance, but that was a good spot. I followed my plan. The 50% target, that's just a great scaling point to go ahead and release the risk, or at least alleviate some of the risk in the trade, if not all of it. And in this case, you take 50%, and that gives you 50% of that 191 gives you 108.78, and that was the target. Actually, these are wrong right here. This should be 50, 75, 100. So it's basically very, very simple. For today, market check this morning. So at 8 o'clock this morning, I get on the mic and I say, okay, here's what I'm looking at. I think 1713. 1713 is the pivot for the day. Below this pivot forecasts a move down to 97.75. Above the pivot, if we break above the pivot, that forecast targets at 23.75 and 29.75. Well, we got a clean break through that level, and we got a program trend day throughout the day where these programs just kept kicking off the entire session. We hit right into 23.75. That was the primary target for the day. You know what's great? That was my target for the day, but Kathy also pointed to that level as a, using her harmonics and volume profiling, we matched. That is a high confluence match right there, using various approaches, and price went right to it. That's a 10-point move right here from the break point. And I say, okay, that's the primary. If we continue to remain strong, the next target up is 29.75. We came within 4 ticks of hitting that full-on target up top. So again, another very accurate display here 2 days in a row of how to use these targets. So again, just to reiterate, the 23.5 was the 10-day ADR. That means that the ES is averaging 23.5 points each and every day over the last 10 days. It's just an average. So now if you forecast 23.50 from that 1706 quarter overnight low, that gives you 29.75. If you take 75% of that 23.5 value, that gives you 23.75. So that's all I did. Very, very simple. This is a technique that you can use each and every day to identify these targets. And again, 75%. The reason I use that is because the market doesn't trade in perfect averages. You don't see the market move 100% of daily range every day. Otherwise, the market would move 23.5 points every single day, and that's not the case. But if you lighten it up 75%, that's why that target has an 80-something% probability of being hit on any given day, either the bull or bear target. So this is my approach. It's very, very solid. And this is what I do every single day. I come up, I tell you some key levels, and I give some targets. And all of us do it throughout the day, every single day. What I love is the MIM, the Mr. Top Step and the closing imbalance meter. This one right here is fantastic. This was today's MIM, closing MIM. And you know, Danny alluded to how it works. Basically, it gives you a glimpse of the closing imbalance from the New York Stock Exchange. And this is a proprietary indicator that Mr. Top Step, you can actually subscribe to from Mr. Top Step. If you're a part of the trading room, you get it included in your membership. But what's great about this indicator is it provides early warning indicator on if there's any buy side or sell side imbalances in the market. And it gives it to you the first reading right at 2 o'clock Central Time, 2 o'clock Central. And then every 10 minutes it gives you a snapshot and puts a table here so you can kind of get a feel for if the MIM is increasing or decreasing in strength. Anytime you have a super buy-side imbalance right at the beginning, it usually maintains throughout the session. And that's something I mentioned today in the room. So if you look actually at what happened today in the chart, this is fantastic. And this is perhaps my favorite play using the MIM because it has a high success rate. Basically what I've noticed after months and months of watching the MIM is that right at 2 o'clock, you don't often have a super imbalance right at the release of the data. But today, you had an 89% buy-side imbalance with 330 million net to buy. That's huge. Anytime you come out with an 80, a plus or minus 80%, and then you have basically 200 or 300 million dollars of imbalance, that's usually a straight-on buy signal right out of the gate. And here's 2 o'clock right here. Here's your huge buy-side imbalance, and the rest of the day was straight up after that point. So basically from 23s up to about 28s, that was your closing move. And every single day we come in here, identify what we think the MIM might do. Red Lion Trader, Marlon, is the creator of the tool and leads the research and the efforts behind how to use it. And you know, every single day we gain more information, and this was one of those times where right out of the gate showed strength and continued higher. Now, every day is not like this, but this is just another way to use a valuable tool in the market. And this is something that that can help in the last hour of the day, every single day. So what's great about this market and this collection of traders in the Mr. Top Step room is that we all have different approaches, and we all trade a wide variety of instruments, and we trade all day long at different times. So at every time of the day, there's something that we're looking for, or some setup, or some tendency that we're looking to buy or sell. And the MIM is one of those things that we really look to in the last hour of trading today. Worked out great. So with that, I want to say thank you for allowing me to take a few words, show a little bit of an approach of how I approach the market. But next, I'd like to pass it off to Kathy Garber with Structural Trading, also a Mr. Top Step contributor. She is an expert in harmonics and volume profiling, and she's a fabulous, fabulous person. You know, everyone she comes in contact with really, really loves her, and she's fearless when it comes to trading, and she's really, really good at what she does. So right now, I'd like to turn it over to Kathy Garber so that she can discuss harmonics and in her trading.
Thank you. Hi, everybody. I'm Kathy. Okay. First of all, let me just say that trading is a very personal thing, and everybody derives at what works for them by different means. So I have a lot of respect for Danny and Brian and the guys on the floor, because they have a totally different perspective of how the markets work. And I didn't have that luxury of being on the floor. So I had to learn price action and how the markets work strictly through charts. And so that's what works for me. And I feel very appreciative that I am able to have such a great place to share that with. And it's really very cool when you have several different traders coming to a same target, but by totally different means. So anyway, let me explain a little bit what works for me. And I use harmonic patterns. And so let me just say, everything that I share here is for educational purposes only, and that every trader should be aware of the risks in trading. Okay, everything in our universe has cycles and Fibonacci sequence. Just Google Fibonacci ratios and you will see that it is in everything. It's in the human body, it's in the planetary system, it's in everything. So it only makes sense that these cycles and Fibonacci sequences are also going to be within the markets, right? And so what this does is it offers a probable cyclical rotation and a means of a measured movement. Now, I like this analogy of viewing the Fibonacci's as bus stops, the ratios as bus stops. They're all of the Fibonacci ratios are valid stops for price, but how long price stays at each stop is totally dependent on how many people or traders get on and off the bus. So if you are familiar with Fibonacci ratios, you would have noticed that there are some ratios that are not recognized at all. Just price just goes through it, and it's like that, you know, it means nothing. Well, there's nobody interested in that price. So at that particular instance, it is not as relevant as a price that it stalls at and people are getting in and out of trades. Okay, this is an example of drawing fibs from this low on the left. Hold on, let me get a little red dot. Okay. Okay, this left side of the chart, this low, I drew a fib from that low to that high. Okay, and so what that did is it gave me fibs that showed me if price pulls back, how much is it going to pull back, okay? And then I drew fibs from the high going forward to the next low. Now, what's interesting, and keep in mind Fibonacci's are fractals, so you're going to have to work really hard at drawing a bad fib. It's just amazing how many different ways you can draw a fib and you will find correlation. So in this case, there is correlation at where I have these black arrows, right? Two different, totally different Fibonacci ratios drawn from different points. Well, they both had the same point up here, but regard two different rotations, and how different ratios are combined, saying, you know what, this is an important level. So just look at it. Just from the blue fibs, I want you to look forward, because when you first draw this fib, you don't see all this stuff on the right side of the chart. But I want you to take note that how the blue fibs are recognized after they are drawn. Here, 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 here. This is one of those instances, right, that there weren't very many people getting on and off the bus here. So this is an area that would be considered no value at this point. So we just look to the ones that do have some kind of confluence or some kind of importance. This is drawing Fibonacci. Now there's no wrong or right way of drawing fibs, but you can get important levels if you draw from the low to the high or backwards from the high back to the low. So let me explain. So if I draw a fib from this low to this high, this is for a means to find out how much it's going to pull back, how much it's going to retrace. How much price retraces an impulsive move tells a story. Now, what I like to be aware of is, we're missing a slide, but I'm just going to talk about it anyway, is the golden ratio zone. The golden ratio zone is comprised of the Fibonacci ratios between 38.2 and 61.8%. And the reason why I call it that is because it doesn't matter if I draw the fibs from this low to this high or backwards, this zone is going to be exactly the same. It's going to say opposite. I want you to notice 32.51.28, 32.44.97. That's the top and bottom of this zone, okay? Oops. Okay, this is drawn the other way. This one's drawn from the high to the low backwards. And what this does is it gives extensions to the upside so that you can see targets ahead of time. So just by drawing this one fib on this one impulsive move, I have targets to the downside, and if it goes, makes higher highs. And I want you to see that price recognizes these fib ratios in both directions, okay? And again, 32.51.28, 32.44.97. It doesn't matter if you draw it from the top or the bottom, those levels of the zone are going to remain the same. Okay, harmonic patterns offer a predictive outlook suggesting which Fibonacci ratio or bus stop has more participants, those getting on and off the bus, getting in and out of trades. Okay, so what harmonic patterns do is they offer me a better understanding of which fib has more importance depending on how much of an initiative move is retraced. So let me show you what I mean. On the left side, there was an impulsive move from the high to the low, okay? It retraced, if you go to the right, 70.7%. Just by having that retracement, I automatically have a completion target for that particular pattern here at the red zone between 103.96 and 104.38, and the extended target of 105.41. I also know just by this impulsive move to the downside and the retracement where three significant levels are. They're each point of the triangle. So I write that on these levels so it's an easy visual. And what happens is if price once it retraces, if it holds below this point of the triangle, the implication is it's going to attempt to get to this lower portion of the triangle, right? If it holds above this point of the triangle, it has a higher probability of attempting to reach the next significant level, which is the upper portion of the point of the triangle. So just from that first triangle, I know that if it holds above this point of the triangle, if it holds above 102.70, this is CL, futures, 60-minute chart, that I have upside targets that I've noted here. And what that does is it takes out the guesswork of where I would scale if I'm in a long position, because if it holds above this point, it's offering me a long opportunity to test first the significant level and then the targets. So it makes it very mechanical and it makes it less emotional. Okay, so the thing about harmonic patterns also is a smaller pattern will help a larger pattern play out. Now, each harmonic pattern has different points, okay? It has the first triangle and then the second triangle. So after the first triangle is made, it's required that there is a pullback at least 38.2% to form the next leg. Each leg needs to retrace the previous leg 38.2%. That's just a requirement for harmonic rotation. So I already have a target, if it holds below here, to go at least to the 38.2%. And I also realize it can go all the way back to this other point and it still remain a valid pattern. If it takes out that low, it's going to invalidate that pattern, and I can exit and I can no longer worry about what the targets are to the upside because it's invalidated that pattern. So this is a case where this blue pattern completed. It did not take out this previous low, and once this pattern completed, it started retracing. These are reversal patterns. So a strong reversal pattern is going to have it's typically will retrace 100% or more. Okay? So this particular blue pattern retraced over 100%, right? Because it started here. So that's a strong pattern. But what it did is it helped form this leg of the green pattern. And now, and this isn't current, this was yesterday, but now, at the time of this chart, if it holds above this 102.62, the implication is at least an attempt to get to these upside targets. Otherwise, a hold below here, I would read it to say it's going to attempt to pull back at least 38.2% from this low to this high, and we may just remain in a sideways rotation. Okay, harmonics and Fibonacci ratios offer the where to stock an entrance of a trade with their predetermined risk, targets, and a final exit. So this does, like I said, it replaces emotional attachment. It replaces emotional attachment to a more mechanical detachment style of trading. And once you can remove, now it's pretty difficult to remove emotion 100% because we're human beings, but the less emotion that we can have during a trade, the higher probability we are of making it either a successful trade or reducing the risk to where it's not detrimental to our psyche. Okay, this is an example of, remember, the blue pattern that completed. Okay, I went to a smaller time frame. In this instance, it's a 4-tick Renko chart. Okay, so let me go back and show you. Remember this blue pattern? It completed here. Okay, that's where we're looking at the smaller time frame. And so once it is completed a pattern, I tend to be a more conservative trader. Now, what's great about the room is there's a lot of aggressive traders, and they enter aggressively, and they stay in trades aggressively. Whereas I am more conservative, and I like to take chunks. So it gives us a balance within the room, and it also offers what type of trader you are to have options. Okay, So for me, I would wait to see if this completion of the pattern, I have a specific guideline of rules of what I wait for to enter the trade. Now, of course, it's not always going to work out 100% of the time, but it is minimalized risk and it offers a decent entry. I don't anticipate getting the very low of lows or the highs of highs. Okay, I like taking chunks. So this was the completion. For me to go into a long trade, what I'm going to look for is I'm going to look for price to be above this Bollinger Band midline and have at least 2 green bars. Okay, you can't tell it here, but these dots, they change color, and when it's cyan, it means that price is moving in that direction. So if I have an upside cyan dot, that means it's moving to the upside. Okay, so those are the 3 things I would like to see. So it's here where the circle is, the first circle, that would trigger a long opportunity. My strategy is to take off 2 units out of 4, and I normally trade the ES at one point. That automatically reduces risk tremendously, okay? So if I choose, I can have a totally risk-free trade, or I can give it some wiggle room and have more of a break-even trade. Okay, so basically what I'm looking for are the triggers of my guidelines to enter a trade, and once I'm in the trade, then I already have my targets, because I'm looking for the golden ratio zone first, right? After the first point, I'm looking for the retracement targets, and the golden ratio zone is going to be the first ones. Okay, and there's nothing more satisfying than getting into a trade and seeing the mem say long. It's pretty cool. Okay, let me see if there's any questions. You know what? This strategy works on, somebody asked, is this seminar for Forex too? For Frank's strategy and my strategy, they work on all instruments. Do I use the Gartley pattern? I use them all. Well, all that I'm aware of anyway. There's some that are... Do I have the next upside target for ES for tomorrow? Well, let me just show you what I'm looking at in ES. Okay, price just keeps taking out highs and taking, it's, so it's really just traveling in this channel, right? So my next target for tomorrow is 1738 and then 1748.25 to 1750, and that's going to correlate with the top of this channel. In that region, unless it falls back below the 1726.75. Now, it's pretty interesting. If you look at the channel, it has reached the top every time that it has attempted to get there, except for this time on the 16th, and we're having one more attempt. Okay, so the midline of the channel is going to be important. ABCD is a very simple means of having targets. So if you just use a previous low, and let's use this one, and I use here, let me make this bigger. I'm just going to use this low. The reason is it was the last time it tested this channel and attempted to have a high. So I'm going to go from that low to that high, and I'm going to project a Fibonacci extension tool to the next low, okay? And as we can see, it's exceeded the AB equals CD, but it is testing the extension target at 1734. And I want you to notice that the next ABCD target of 1739 has correlation with a fib I already have there at 1738. So what that tells me is a pullback to this midline of the channel offers a long opportunity, or or a more conservative would be a close and support test of 1732, and then this is definitely a scaling point at 1738. I hope that answered your question, Brian. Okay, I don't see any other questions, but if you did ask a question and I missed it, please repost it. Otherwise, I will bid adieu and say thank you very much for taking time out of your day to spend this portion of your day with us.
Okay, thank you so much, Kathy. I'm just passing.
Thank you very much.
Thank you, and I'm just passing it over to Danny.
Yeah, thank you very much, Kevin. Hold on one sec. Okay. Well, thank you very much, everybody. And I know that for some of you in the United States, obviously it's been a long trading day. And again, I want to thank Kevin and Real Traders Webinar. The final thing that I would say is that, I mean, I wish I could be around a little longer and tell you a little bit of some of the trading stories that I've gone through and how, you know, we moved, you know, big 2,000 and 3,000 lot orders in the S&P back in the day when, you know, 100 lot was $50,000 per pointer per handle, and all the, you know, just all the things that we've seen throughout my life in trading, and just, you know, show you some of the things that we experienced during the day. Excuse me, during the day. But what I would say, I think it's important, as you're seeing part of the offer that we've got here for the boot camp, that, you know, I think it's important to be around other like-minded traders. I really do. There was a term that John Nigerian used a long time ago about trading in a closet, and I really believe that you shouldn't trade in a closet. Whether you're part of a trading group or whether you're part of a trading room or a chat room or whatever, find other people that you can bounce your trading ideas off. You know, I'm gonna finish this off real quick. You know, there was a well-known educator, and I'm not going to mention their name, but at one point they had almost 550 to 600 people in the room, and the guy came down to the floor of the CME. There was a futures thing in Chicago, and a very nice guy, and we had been talking, and he said, "Danny, let me show you my room." And he opened up the room, and that day on a Friday after an unemployment number, there was like 570 people in that room. I just couldn't believe it, and they were charging a lot of money. And I was just taken back by that. And I was so impressed that I thought, this is really something. But then I didn't hear from my friend for about 6 months or a year. And during that time, the credit crisis was at the height. It was like at the height of the credit crisis in 2009 or in 2010. And he had gotten a hold of me, and I asked him, I said, well, how's the room going? He said, well, the room's not doing too well. What had happened is that their trader that had been trading very well for a long time, got on a losing streak, and they lost the 600 people in the room. I don't want to say everybody lost, you know, I don't know how many people, but hundreds of people went on a big losing streak and lost thousands of dollars. I'm the last person that wants to see anything like that, and I think Mark Nichols is the same way. We both believe that education and staying on it and getting on top of it, you can actually make some money in these markets. You know, if you're a trading junkie and you got to keep your finger on that, you know, the keyboard buying and selling all day, that's really not what we do. That's not part of our daily toolbox. But that said, I believe Mr. Top Step has a collective intelligence of traders, and I believe, and I don't want to insult anybody, but I think it's really, really hard to constantly, every day, be consistent with your trading with all the gyrations that occur in the markets, whether it be crude oil or gold or, you know, or the S&P. You know, the S&P was the big one where algorithmic trading hit first, and then it moved over into the currencies, and then it's the number one algorithmic contract now is gold, and we pay attention to that stuff daily. We think it's important, but our special offer here today really is a special offer. Today what we're going to do is we're going to offer you to be part of our boot camp for it's $19 entrance. That will get, with a $12 coupon, you get a free 1 week in our room. You'll get an opportunity to see us live in the MIM. You'll get an opportunity to see Jack, Kathy, Pivot Boss, and myself all firing live. Okay, everybody putting out their stuff. Now I implore you that if you're in other rooms, give us a shot. I don't think we're going to let you down. I don't think any of the people that are part of the collective will let you down. And from there, you know what? I think we've done our thing. I'd love to sit around and talk more stories, but we know that there's other people coming on, and we got to move along. So that said, thank you very much, Kevin, and thank you very much, Mark Nichols. Again, class act at the Real Traders webinar.
Thank you, Danny. Thank you so much for coming on. We just want to thank also Kathy and Frank and everyone over at Mr. Top Step. Everyone, based on the feedback, everyone is so pleased to be able to get such great strategies from such reputable traders. And just to let everyone know, if you look in your chat box, you'll see a link there. It is realtraderswebinar.com/Mr. Top Step. realtraderswebinar.com/Mr. Top Step. If you go there, you're going to get a whole week boot camp. So 7 days with the Mr. Top Step team for $7. It's absolutely a no-brainer. And I'm looking over there. And okay, so yeah, James, all you got to do is go over to realtraderswebinar.com/Mr. Top Step. Do you guys see it over there in the chat? Thomas, if you guys look right in the chat, you guys should be able to see that link. So I'll keep it up there for a little bit. Again, we just want to thank everyone for, Danny Riley, especially Mr. President, Mr. Top Step, Kathy, and Frank for coming on and sharing such great strategies. Guys, for those of you that did ask, yes, this will be recorded. Guys, if you look in the chat area, I see a lot of people they don't see the link. I'll post it again just to see if you guys can get it. All right, so I'm going to post it there. Do you guys see it now? Thank you, Brenda. Thank you, Terry. Okay, the cost is $7. Oh, after the first week, that is going to be I think there's different options that you'll be able to choose at that point. Okay, so you guys all see it? Yeah. You see them all coming through?
Okay, Kevin,
yeah.
Thanks. Hey, Kevin, real quick, the room, we charge $350 a month for the room. And that may sound like a lot, but when you throw in the $100 for the MIM that we put in, and like I said, it's a great deal. It's an unheard of deal. And we've only done it one other time. And we've had a really, really good success rate with people coming in and really learning a lot. And that's really what it's about. But I'm going to jump off, Kevin. Thank you very much.
Okay, and Danny, one question that's there is, what time is the room? What is it going to be the times that you guys will be trading?
Oh, okay. Thanks. Yeah, the room is really pretty cool. The room has got live charts. It's got audio connected to the floor. We've got screen share. And during the day, Jack, Kathy, and Pivot Boss, they all come on live and speak during different intervals during the day. The room really actually, people start flooding in the room at about 6:30, 7 o'clock in the morning. And I know that Jack does a bond update because he's on the floor in the bonds. And then it stays open until 3:30. And actually some people stick around even later. But it is a really cool community, I just encourage people to open up their toolbox a little bit and take advantage of this killer offer.
Absolutely. All right. So guys, I hope you got everything there. This was recorded. We will be, as always, we send out the recording usually within 24 to 48 hours. You'll get an email with the recording. And that's about it. Guys, thank you so much for coming out and spending a Thursday night. And thank you, Danny. Everyone, have a great night.
No problem.